Today we're talking to Martin Checketts from Mills Oakley Lawyers about some of the legal aspects of buying and selling a financial planning business.
When you're buying and selling a financial planning practice, it's very important for both sides, the seller and the buyer, to give thought to the GST and stamp duty consequences of that sale and purchase. From a GST perspective, the key rule is that if you're selling a business as a going concern, then that will be a GST exempt transaction. However, if you're not selling a going concern, in other words, if you're not providing the buyer with all of the assets that he needs to run the business ongoing, then it won't be GST exempt, and the seller will need to charge 10% GST in addition to the purchase price. In the financial planning world, how this normally manifests itself is that if you're selling a client book, so simply a register of clients, being the list of clients, the right to service those clients ongoing, and the right to receive the recurring revenue in respect of those clients, that's normally not the sale of a going concern, so it would normally be a taxable supply upon which GST is charged. However, if you're selling a business in the true sense, so not only the client book, but also, for example, the business name, the hard assets of the business, such as the plant and equipment, etc., if you're transferring the lease, and if employees are also transferring over, you're much more likely to be within the GST exempt going concern situation. And often where buyers and sellers go wrong is that they don't ask their lawyer or their accountant to turn their mind specifically to the going concern exemption when they're drafting and negotiating the transaction. There's often a tendency of people just to assume that it will be GST free as a going concern. But the word of warning that I would give is that the going concern exemption is quite a technical exemption. You need to tick a number of boxes in order for that exemption to apply. So it's very important that you should ask either your lawyer or your accountant to consider that and to give you some good advice.